what are you looking for when you look at companies to make an investment in?
Yeah. As far as the company itself is concerned, I'm looking for either a type of a business model that could either disrupt an industry or more likely just exist within an industry and coexist with others that are there. What's going to make them special enough to stand out? I'll use something that's really easy to follow. People try to get into the clothing business and they want to get into retail and sell their cool designs and their cool hoodies and their cool hats and their cool jeans, at Nordstrom. Join the frickin' club. Everybody
Yeah.
does. Okay. That's not a business model. Okay. That's not a business model. But, take a company like MeUndies, for instance, and they, really did everything online and built a brand around them and were able to do that. I'm not invested in that company either. It's just the first one that came to mind as something different. So I'll look at things from that regard, but then I'll also look at the founders. Does the founder have enough grit? Are they scrappy to get things done? Because the last thing I want is someone that's going to just spend money like it's damn water. I learned the hard way, really, my first 6 months in this, that some founders are just like, I would call them reckless. And I told a couple, you are borderline reckless with your behavior. You're taking other people's money and spending it like it's nothing, and God bless. I'm not talking about people like buying a Mercedes or making their car payments with the money. That's not what I mean. That's borderline illegal. That's not borderline reckless. I'm talking about people that are out there raising capital and they don't have the business acumen to walk the walk. They're able to just talk the talk and talk in circles and try to convince people to write them checks. Well, they don't have really any plan. So you get these folks that might have that gift to gab and might know someone that knows someone and have some credibility when they're out there preaching about this company that they have. But when it comes down to it, shoot, they don't know what they're doing. And buddy, you just took 800 grand from 3 different investors and you don't have a real plan. You just talked a bunch of nonsense that isn't going to come to fruition. That to me is what's reckless. So I learned that really the hard way when I started off doing this, and I've really now focused in my evaluation on the individual himself. Is this the type of person that's going to get things done? Is this person going to do very little with a lot? Or is he going to be able to do a lot with a little? Could he make a mountain out of a molehill in a good way?
Right.
I look for those characteristics.
That's interesting.
Yeah.
I'm sure you find a lot of businesses where, they've been around for a long time and they kind of reached the zenith 20 years ago and haven't really moved.
Yeah.
But now all of a sudden it's a family-owned business and the second generation is coming in. Do you find that that's an opportunity sometimes because the younger generation has got a lot more energy and desire to grow?
Yeah, I'll tell you this. Mostly I'm involved on the earlier stage venture capital. I am involved in some pretty major real estate deals, like for instance, the Newport Beach Marriott. I'm part of the investment group that purchased that. There are some deals like that I'm involved in, but a lot of the earlier stage stuff, it's just not family businesses. And in fact, you might get people coming from well-off families that have generational wealth that are trying to branch off and do their own thing. And then they'll go look for partners like myself to go help them, bring them to that next level. Not that they don't bring enough to the table themselves, but they're smart enough to find strategic partners to walk in with. And what's really interesting about those kind of folks, and I'm sorry, Carl, I know this isn't exactly what you were asking me, but I kind of took it this way.
I like it.
Yeah. A lot of these guys, they'll have their own money. Okay, let's use this generational wealth. Say you're in the 4th or 5th generation and there's, they invented the question mark and they're getting residuals off every time everyone uses the question mark or something crazy. You know what I mean? Like these people exist out there. They don't need any venture capital money, but they know that they might not have it in them by themselves to take this where it needs to go. So they'll slice off, hey, 10% of their company, and they'll put some kind of valuation on it and have investors put in skin in the game. But really what they're trying to do is have that person on the same side of the table as them to act as a colleague or even an advisor, if it makes sense.
Do a lot of venture capitalists kind of take this, call it a board member type of role, where you stay actively involved and give advice and, those sorts of things?
Yeah. So there's really two boards that make all the sense. There's the board of directors, which is a legal governing body that'll be talked about in the operating agreement, and there's voting rights and very, very specific jobs and responsibilities that those people have, and an authority that the people on the board have. Then there's also the advisory board, or the board of advisors. Two very different things. And it's almost shocking to me how people will use those terms interchangeably. The board of directors and the board of advisors are two totally separate things.
Right.
The board of advisors are typically what I was describing earlier, where you want to get people involved. Usually they're throwing in some money as an early stage investor or some type of an investor, and they're bringing more to the table. Maybe it's their network, maybe it's their resources, maybe it's their, an introduction to, whomever. And for that advisory board, there's usually some kind of compensation to the people that are on that in the form of like advisory shares. So maybe it's like 1/4% to, do this, and this, and it's vested over the next 2 or 3 years as a member of the advisory board. That's not uncommon. It is uncommon to be asked to do that. You have to be bringing something to the table that the entrepreneur sees in you to want you to be on that. And I'm fortunate enough to be on many of those. And I'm, happy to do that. I'm proud of that. The board of directors is different. The board of directors, it's usually people with a lot of skin in the game. Okay. So typically if a venture capitalist is on that, they let around. All right. So for any of your folks that watch Shark Tank, you get that seed money, then you get Series A round and a Series B round, and there's lead investors of each round, especially when you get to Series A and beyond. And those are typically, it really depends, but usually you're going to be well into the 7 figures as far as the check is concerned from that venture capital firm. All right, so if I'm going to go fund your company, if I'm a venture capitalist and I'm going to fund your company $5 million, guess what? I'm going to give you that money, and part of the criteria is that I have a board seat. Okay.
Right.
And oftentimes what you get is funds, venture capital funds that are in that mix. Usually it's not just one person's money. It sometimes is. When it's one person's money, it's considered a family office. Glencrest Global is just my money, so we're considered a family office. We're not a fund where we're pulling other people's money in. So you're not going to see us writing those kinds of checks in later rounds. Those are usually the much larger VCs that are a pool of multiple people's money.